Good morning, everyone. My name is Josip Causic. Welcome to Trading and Review. The chat room key is on the screen, and if you would type in that QR code on your phone and get the Speak Up app, then you can ask the question with me while we're live. Otherwise, you could ask a question on this area right here that I'm underlining with me, and take a moment to read these disclaimers. I'm going to have them running for a few moments, and after that I'm going to hide them, so we're not a financial advisor. All the trades that we're doing in this trading and review session are for educational purposes only, and I want to make sure that you took a moment to read that. And we are going to now present the chart of the current market. So I have here a plan to place the trade on the JP Morgan. And before I do that, I just want to talk about the setup here. So obviously we have here moving average. And for the last 3 days, we've been trading below this moving average. And in this area right here, I'm going to encircle this with the rectangle. We're looking at the standard deviation probability wise for the last 3 days. We've been down, and according to the standard deviation, after that we usually start to lift up and probably break above this downtrend moving average. So what I'm planning to do right now, the session is called Trading and Review. I'm going to place this trade, and then we're going to review it just before the end of the session. In order for me to do that, I'm going to pull up the Thinkorswim platform. As you can see right here, I'm typing the JP Morgan Chase in it, and I'm going to take a short-term option on it, and it's going to be a trade that is pretty much identical to what I like to call at the money trade, which means I am going to be selling right now 139 put and protecting myself at the 138 put. And at the same time, because we're currently at the 138, 139, I'm going to be buying the 138 put and selling the 130 put. So how do we place this? So first of all, I'm going to go over here where it says buy the vertical, and that would cost me about the 62 cents. But what I'm going to do over here, I'm going to finance some of that thing with selling the 139 and protecting myself with the lower one. So here it is. So here's a trade that is going to cost me total of the 21 cents. I just want to make sure that the quantity is shown here to everybody. It's only 21 cents, and I'm going to confirm it and send it. Now, of course, 22 is the low side of it. 29 is the high side of it. There's no guarantee that I'm going to get filled instantly, but I'll do it anyway. So the maximum profit on that thing could be $78 money invested in a trade. Over here it reads it as a maximum loss is 122, so that's the money invested. So now when I place this trade in, I have a position that is composed of the bull put spread as well as a bull call spread. And the reason why we're placing this trade, because our intent is actually to profit from the move up. This thing is not filling me, so I'm here on a time. So I'm gonna just switch it here to the market in order to get filled here faster. And as soon as I get filled on the market order here, I'm gonna then proceed. So I'm here on a market order. I don't know why it's waiting here, why it's not filling me. Let's try to change this. Okay, I got filled here for 22 cents. Okay, very good. So I got filled here for 22 cents, and I want to make sure that this is all clear. Okay, so 22 cents. I'm going to just take a quick copy of that, put it at the side, and bringing this particular setup, which is today's session, is a top session. That's why I named the room to which you can interact with me June 27th. I'm going to just here type in Hello, everyone. Just to make sure that you guys can interact with me and test this through. And the first trade I want to do is basically JP Morgan Chase. It's at the very end that we're going to look at the big picture. And I'm going to just walk you through it how I came up with the idea of trading the JP Morgan Chase in a moment. Again, I'm moving quite fast on it because here we are on time, but I do want to walk you through it, the logic of arriving at trading the JP Morgan Chase is simply by from our website where we can look at the multiple things. We can look at the bigger picture here when we pull up the, let's say, monthlies, and we can talk about that in a moment. But there's something here called groups right in this area. Let me just circle it here so everybody can see it. In these groups, which I believe it's very much underutilized, we bring up entire U.S. stock market. So as you can see right here, it says the current U.S. stock market. And we can also look at here where it says a trend, which would give us a little bit more information than just the current monthly, right? So if I put here longer term trend, it's giving me monthly and it's giving me weekly. So obviously JP Morgan Chase belongs in the financials. And if you look at right here, I'm going to put this in a yellow. JP Morgan Chase, it's up for a month as well as it's up for a week, right? So when I click on a JP Morgan Chase, within that, when I click within the financials, I'm getting the multiple subgroups, right? And subgroup to which JP Morgan Chase belongs, it's banks. And again, I want to emphasize this because it's so essential when you're trading that you are trading with the trend, right? So monthly trend is up, the weekly trend is up on the banks, right? Before it was down and then eventually went into the positive territory. Yeah, hello all. Thank you for interacting with me. I really appreciate that. And then what I did when I clicked after I went to US market, financial sector, the banks, I have then looked up the JP Morgan Chase. And as you can see, JP Morgan Chase is a bank that is listed here, and it's in an uptrend, right? So JP Morgan Chase is in an uptrend. So what I'm showing you here is pretty much the fast way to determine which instrument you want to trade. So US stock market, financials, and then the banks. Josip, your group thumbnails is large and easy to read. Mine is very small. Do you do something to enlarge them without altering any other page? No, that's the way how it is. Like you can maybe work on that a little bit later. You can type in your name so I know with whom I'm interacting to. So anyway, so what I want to show you that I have fired this straight in on the JP Morgan Chase that is going to get reviewed in a moment here. And what I did here is simply I purchased the 138 call for a this week expiry, selling the 139 call. And at the same time, I have financed that by doing the bull put spread. So I know that's a mouthful, and I know I'm moving quite fast over here, but I just want to walk you through it through this by doing the option chain. So I'm going here in option chain, and I'm repeating the same process. First of all, in an option chain, I need to type in JP Morgan Chase. JP Morgan Chase currently is trading in a live market, as you can already see, above it was trading at the 139 when we placed the trade. Right now it's breeding. It's just slightly below it, right? So it's breeding down. So JP Morgan Chase is trading around 139 approximately. It's dancing around. So what I have done here, I create the spread, and I'm gonna edit the spread in such a way that it's a bullish spread that involves a bull call spread. And this bull call spread needs to be edited because I have bought 138, which is in the money. and then I sold the 139, which is basically currently where it is at the money. So when I click here, OK, it's gonna spell out here that the price for that, actually I should just enter the information where did I got filled. So just as a reminder here, I know I'm moving fast because I'm so aware of the time. I have paid $182 for purchasing this particular call. Now be aware of it. If the JP Morgan is sitting here, and I'm going to just round it up on 139, right? That's mean that my buying to open long 138 call is what we call in the money by $1. Now look at how much more they want for it. They want for it additional 82 cents. And I almost refuse to pay them that, because if I know that the currently JP Morgan Chase is at 139, why do I want to overpay them 82 cents? Well, okay, so what do I do against it? I go against that and I sell to open the 139. But Josip, that is at 139. That's why I'm picking this strategy for you, ladies and gentlemen. Hi, Joe. Because Joe, in this case, I have no expectation of JP Morgan. I just want JP Morgan either to stay at that level or to move up, as long as it doesn't move down. Now, of course, like in a live market, this can take a breather, and it took a breather because we're currently here at the 138 and 87. As you can see, we have taken a breather of about 13 cents, but we still have a what? 3 or 4 more days left. So I'm not too much worried about it. I want to continue explaining that by selling to open, my intent was to get back those 82 cents that they have ripped me off. And I'm going to change the color just slightly in the red so you can understand my logic. They ripped me off here 82 cents on this particular 138 call. So I'm trying to get back the 82 cents, and guess what happens when I sell? They actually ended up giving me, and this is such a good news for me, they ended up giving me here $1.22 credit. So net, when you subtract what I originally paid, which is $1.82, and out of that in the moneyness was a $1, and time value was 82 cents, right? I was trying to get back these 82 cents, and my whole bull call spread, this bull call spread that I currently talk about, that involves these strike prices, selling the 139 and buying the 138, when you do the math in your head, it costs you only 60 cents. Well, that's very good, right? How do I get to 60 cents? I simply subtracted 122 from 182. So having said that, let's just type that in. So when this is being watched later on, you will understand exactly where I got these numbers from. So here it is. Here's a field of the 122. When I click OK, it projects it and it says 60 cents. So this is just a bull call spread by itself, not counting what I did next. Because what I did next was really like, why should I even give them the 60 cents when in fact I can do better than that, right? So over here, there's a bull call spread that I calculated that is giving me 60 cents. So I'm thinking, but if I believe that this is going to really be above, then maybe I can finance it. Okay, I'm going to just hide something here so Joe, you can maybe see better here in terms of the graphics. So I'm going to go over here in the lower third and just quickly hide that too. Okay. So let's check the way it's speak about. Okay, good. So we're good to go. Okay, so we are talking about the financing the bull call spread with bull put spread involving same strike prices, which means we are selling at 139 and we're buying at 138, but it's a put. It's a put. So as you can see over here, in a live platform, I sold 139, and I'm going to change this from open interest to intrinsic value. So you would see exactly that that thing currently is against me 11 cents, 10 cents right now. And I have protected myself with 138. So how much did I pay for that? Well, I have already pointed out to you over here that I got the 118 for selling the 139, and 138 I got 80 cents, right? So what I'm doing right now, rather than having the two different tickets, I'm going to just add a leg here. So I'm going to go over here and I'm going to say add the option leg and add another option leg. So now they randomly throw in the option legs here, like, so what I can do in this case, like I can just get rid of it, but I'll build this properly. So I'm editing the spread, and the first leg that I'm adding is the one that I'm selling, and the one that I'm selling is actually a put. And I'm reading right now the price on which I got filled was a 118. Another leg that I did is the one that I bought, and it was a lower unit, and it was a 138. 138. And that one I paid for 80 cents. And I do want to point out to you one thing here that I do need to change on a Tradeactive platform. I'm trading the June 30th. These numbers are correct, 118 and 80 cents. But over here, what do I need to do? I need to put it on a June 30th. I need to all align to do June 30th. And now when I click OK, it shows that it's a 22 cents, which is the exact amount that I have calculated here. Not that I calculate, that the paper trading account has filled me in. So I'm financing. I wasn't able to get exactly the 60 cents, right? Because the bull put spread by itself gave me less money. But what really happened over here is that I was able to get this for a 22 cents. So I'm gonna repeat the same trade before the trade ends. Also on another product, I want to make sure here that I show you the risk graph. So one of the easiest way to show the risk graph is simply to click right here, and then to point out to you that maximum profit is only $78. Now be aware of it that we are risking more than what we are making. So that's not really 3-to-1 trade. I'm quite aware of it that that's not 3-to-1 trade, but be aware of the simple fact that this is a call investment. We will put a stop on these things when we revisit the chart. So one more time, I'm taking the picture of just this what they call unknown trade, but I personally like to call it out the money trade, because really we are trading the out the money bull call, and we are financing it with the out the money bull put. So that's mean this trade that costed me out of the pocket $22 can earn the $78. So then when I really look at this, my risk of the $22 earning a reward of $78, that is definitely 3-to-1 trade. Now be aware of it due to the margin requirements on a bull put, which is $1 wide. I do need to have a more than only 22 cents in my wallet in order to trade this. As you can see over here, my buying power effect is about $100. But even if you just think about it, making $78 on $100 is a good thing. So one more time, I will repeat this at the money trade one more time, but I will slowly go through it using another example. An example that I'm going to use is going to be in a technology sector. So I'm going to just ditch this, and I'm going to now again start from a beginning. So when I start from a beginning, it's very simple. I'm going to bring the group the group is something here that is definitely underutilized. Under the group, I'm going to point out to you that you have a different sectors, but within a different sectors, this is what you should also look at. Longer term trend, right? So not just like a whatever, this thing is temporarily. So when I'm looking at this, be aware of the simple fact that in this case, we also have a situation that the technology is the one that it's all in green. So it's a green on the top, it's a green on the bottom. I double click on it, and within the technology, we have a different subgroups. So the one subgroup that I personally prefer rather than anything else is this computer hardware. So what I'm doing right here, I'm taking the snapshots and just kind of walking you through it. So I have gone in a technology, and after the technology, I have gone in a subgroup, and in a subgroup, I have selected the computer hardware, and I'm going to pick the best of the best, which is what? Apple. Okay. So now that I have that, I can proceed. So I'm double clicking here on the hardware, and when I click on the hardware, there's an Apple, and it's all in green. Okay. So having looked at that, what I can do now next, I can revisit the chart. So when I visit the chart, be aware of it that on the chart, I need to know where those levels are. So I'm looking at the Apple. As soon as the Apple gets filled up here on my option with option, I'm gonna make evaluation whether or not this is good. Okay, somebody else got filled and got the better price improvement for 16 cents. That's wonderful. That's probably live trade, not the paper trade. But anyway, let me just walk through JP Morgan Chase one more time quickly. The reason why I picked it, because according to the standard deviation, it tends to be down for about the probability wise for 3 days. Today is the third day. We are creating these higher lows, and there's a possibility that we might actually rip to the upside. Apple is a little bit different. And when I'm looking at Apple, that Apple is riding this uptrend. Yesterday had a pretty significant down day, but today is recovering. This is where the 55-minute, the green unfilled orders are sitting, right? So be aware of it. You can pick at that level, but then your profit is not going to be as good as if you put the at the money and at the money. Because I want to teach today just at the money and at the money trade. I'm going to select the higher level, which is 186. So again, I'm going to place the trade, and the trade shouldn't take that long to enter it. Okay, see, now we are already lifting. On JP Morgan, we already lifted those, whatever, 17 cents that before we were down. So I'm not too much worried about it, because all that needs to happen is for a Friday, June 30th to come, which is the end of the quarter, a bull put spread would expire worthless, and I would be able to close the other one. Good. Thank you for interacting for me. I really appreciate that. Let's now look at the situation that we have here. Apple does not have a dollar increments on this particular cycle. If I would move, let's say, to July cycle, even there's a 250 increment. So you know what? I'm going to just stick to the June cycle. And here's the dilemma right now. I can do the 185, but if I revisit the chart, where's the 185? It's right here, right? So that would still be below these wicks of these candles. So that means this area might be supporting, right? This area might be supporting. So because I want to call this at the money and at the money, I don't want to deviate the lesson that I was preparing. I'm going to just stick with it. Now be aware of this. 25,000 contracts already traded on the side. 25,000 contracts. Okay? So what this logic of this trade is that if I buy the 182.50 and sell the 185, what needs to happen? Nothing. We can even pull back a little bit, because we're sitting right now at 186. We are sitting right now at 186. So let me now just kind of spell out here. By the way, I did check the earnings on this particular trade. the earnings are on the May for the earnings have already happened, so they're not. That's not even an issue. So Apple is currently trading at 186. So if I go ahead and I sell to open 185, and doesn't matter if it's a call and a put because I'm doing the same thing, and then buying to open 182.50, I almost have a protection here of about the dollar and some change. Okay, so I really want to place the trade that I don't expect anything from it at all. Just stay at this level. You can go up, you can go even a little bit down, and my outcome is just the same. So be aware of it that this is a little bit different trade because it's going to cost me $250 in the margin in order to do this. So how much am I paying for the bull call spread? For a bull call spread, I'm paying $2.06. Be aware of it. If I were just about to send this, the most that I can make is 44 cents. But that's not what I want. What I want is to finance some of the $2.06 by doing the bull put spread. So how do I do the bull put spread? I do the vertical, and I'm able to reduce it by at least 40 cents. So I'm going to go ahead and send it in. Last time I wasn't able to fill it, but this is a line that I like to call line in the sand on a chart. As long as it doesn't go below the 185, I'm fine. Okay, it can go up to the moon. My layout is different, right? So because we're in live session, we're almost half an hour in. I'm gonna in the simulated account changes to the market order just to get this thing filled, so I can get the specific numbers and then deal with it. Okay, so I got it for 169, but that number by itself is meaningless because I need to know how much have I gotten for each legs. So I go over here where it says a symbol, I type in Apple, and then it shows only one trade fill, and this is the one that I need. So I got filled. They don't call it out the money. They actually call the custom trade. It doesn't matter what the name is. You could come up with your own name. When I was learning this, there was somebody who came up with the term like a leapfrog. And what was that? It was a long-term option. It was called leap, and then he was. Never mind. Let's not talk about that trade. So what I'm doing right now, I have this information pulled up right here in my Word document, so I can work with it. So Apple is currently trading above the 186. I did a bull call and a bull put, which means in both cases I'm selling the 185. It doesn't matter if it's a call and a put. It's just be aware of it. That's irrelevant. What really matters is this commanding unit. This commanding unit is what I don't want to lose value. I really don't want this to lose value. So if we are sitting here at 186 and this is a 182.50, why in the world are they charging me 455? Well, the simple answer, Joe or whoever is here, type in the answer. Why are they charging me? Why does the market maker charge me $4.55 when intrinsic value of that, you see over here when you look at the intrinsic value, it's only $4.40. Why would they dare to charge me $4.85? Why do they want a $45 more between the 440 and 485? Why do they want for simple reason? Because they can. They'll do that. So if I'm getting ripped off, then I want to get something back. And what did I end up getting back? I end up getting back this value of the $2. And let's see exactly how much was it. I got back $2.43. So let's build this piece by piece. You just need to understand one of these verticals. I mean, you should understand both of them, about what I'm trying to say. Out the money, my real driver unit, right? So I'm going to go over here where it says bullish, bull call spread. I'm going to make sure that I add it right away into the right month. So that now that I have altered it, as you can see, they're both at the same month. They're both at the same month. Now, of course, I need to alter the strike prices because the strike prices are not correct. 82.50 is my commanding unit, and 85 is the nearest unit above it. I would prefer if I just risk the $1, but you know what? You can prefer anything you want. When you're trading options, sometimes you can say that sentence, there's not enough options. There's just not enough options. In this universe, in the JP Morgan Chase, I had options that I want. Oh, when you move into the SPY, you get even more options because what is happening over there, you even get options that are 50 cents wide, right? So one more time, I'm bringing this in so you would see where I'm getting these numbers from. So these numbers that I'm getting from are right here. There it is, 243. That's the 243, and the top part is the 455. So if I did this just by itself, if I just did the bull call by itself, my risk to reward on that would be pathetic. Well, not pathetic. I mean, it would be only 38 cents. Why would be the 38 cents? The reason why would be a 38 cents because when you add the 38 cents on the top of the 212, you get the what? You get what? You get 250, which is the width of the spread. Now look at this. This is a problem that I personally have. I have a problem with risking right here this much, which is a $212 to earn over here in a positive only what? 38 cents. 38 cents. I really have a problem with that. I was like, for me, that's, I mean, I don't want it. But then think outside of the box. Can you improve this? So Joe, if you place this trade, like, please tell me how much did you get filled? Because, for me, as you know, it's $1.69, right? And how did I improve this particular trade? Well, let me just clear the screen here and show you how. I have added an option leg, which is again selling, but selling what? 185, but not to call what? A put. And I'm going to just bring here reminders so you will know that I sold that put for lousy what? 65 cents. And then out of that 65 cents, I still had to give them back what? 22 cents. Hey, but you know what? At least I reduced the cost of the $212 to less. So I got filled for 65 cents. That's a credit to me. But then now I'm unprotected. I need another leg. And the leg that I need is the one that I need to buy. And the one that I'm buying is 182.50. 182.50, and over here they just kept that number, which is not really the number that I got filled, and that was 22 cents. Now when I click OK, it calculates here $1.69, which is exact same price that I got filled in the paper trading account, $1.69. So Joe or whoever is here, if you can type in what did you got filled in on this particular trade in paper account, I would really appreciate it. So I'm just putting it right in here. And then what I'm doing here is projecting this unknown to see what the whole thing is. Now be aware of it in this particular case. In this particular case, my outlay of the capital is a little bit more, and most that I can make is what? 81 cents. 81 cents. 81 cents. So let's now, oops, let me just do this one more time here. Sorry, it's taking time to do this. Okay, so here it is. Let me just now walk you through it. 81 cents, right? Why? Because when you add 81 cents on the top of this outlay of the capital, 81 cents plus this, it's going to be again what? 250. What's this? This is just the money that you need to have in order to place that trade. So I know they say it here maximum risk, but that's actually cost of the trade. If you can just call this cost of the trade, then you would sleep at peace. Because otherwise, when people look at like, why would I risk $419 to make only $81? That's not the way I look at it. I look at it in this way, okay? How much did that trade really cost me? That trade really cost me $169, and I can possibly make on it what? $81. So I'm dividing the 81 with the what? $1.69 to see what's my rate of return. That's almost 47%. Now, of course, if you would now count the margin and you're saying I can make only $81 while risking the what? 419, which I'm not saying the math is wrong. I'm saying math is right, but we're going to have a stop on this thing. Then you're only making 20%. Now let's revisit the chart and talk about placing the what? Stop on this thing. Now be aware of it. It's all about the chart. Why do we pick this trade? We picked this trade because we went here under the groups and we noticed that when we add a long-term trend, that the technology sector was up on a shorter term time frame and also on a longer term time frame. Within that, we have selected the hardware that is also up, due to all this artificial intelligence now that is being traded like it has never existed before. Never mind, it's existed for the last 10 years. So just be aware of it, that we then went in and we picked a candidate within the technology that was Apple, that we made sure that Apple already had the earnings. And because Apple already had the earnings from all these other ones that we can choose from, we choose this one right now. Why we wouldn't choose this one? Because it has a what? A little bit of downtrend, whether it's in a longer term or in a shorter term. Now we can also look at the Dell technology. What's the time like? Yeah, we can fire the Dell technology, but I still have in mind that I want to do the big picture. So rather than maybe pushing 3 trades all at the same time, let's just finish explaining where would we put the stop on that. Joe, is that good? Or whoever is here typing, can we proceed on that? Okay, now we're going to revisit the chart one more time in detail. So I'm opening the page. I'm opening the one options with options, and I'm looking first at let's finish up with Apple, and then we'll work on JP Morgan Chase. Okay, when would I need to really worry about it? When my 180 to 50 is being threatened. And in order for me to have a 180 to 50 threatened, what would need to happen with these green orders? Green unfilled orders. They would need to be punctuated to the downside by the strong selling pressure. Because really, my stop, I'm going to type in here, T, stop, is at the 182.50. So I should say at or below. This is where my stop should be. So how do we do this? Well, first of all, when I'm exiting, I need to exit the whole enchilada. I don't exit just one thing. I need to exit the whole enchilada. What do I mean by that? As of now, I have a POS that stands for a position. Okay, so what am I doing now? I'm creating the opposite order. And I'm going to be changing this to the market. And I'll be changing this also time in force whenever. So now when I go over here in this area, I don't know, why is this not opening to me? I'm supposed to be able here to get the ability to type in the, okay, let me just delete this one more time. Create opposite order. There it is. I'm going to bring it up here and then I'm going to work with you. Okay, so I'm going to submit when the Apple is, okay, market, but it needs to be what? Less than or equal to what? 182.50. 182.50. Okay, so as long as the price action stays above 182.50, this is Just not going to get triggered. Only if it gaps down and goes lower than it is. Now be aware of it. I still need to change the what? Time in force, good till cancel, and also I don't know where the price is going to be. So be aware of it over here. They do need to quote something here, and they can only quote what is currently being shown. And what is being currently shown with the Apple being at the 186 and a change is this amount. So I'm going to confirm this and send it, and you're not going to hear the ding. Reason why I'm not going to hear the ding, because the condition hasn't been met yet. You see this condition? It's saying when Apple is at or below, that means less than or equal to 182. So now you can go and sleep at peace, because even if you get hit, you will not lose $400 or whatever they calculated there. That $400 is a total investment. Well, I don't get it. How come it's $400? This 250 is just the one leg. And I'm sorry, not the one leg, one vertical spread. Which vertical spread is that? That vertical spread is a bull put spread that is 250 wide. So the market maker, the broker, has a right to go into your account and to decrease it in additional amounts on the top of this 169. On the top of the 169. So they already took the 169 from you, and then took another 250. So there it is. There it is. So we're not planning to hold this to the end. Strategy video indicates time to stop trigger isn't until the mid-July. What do you mean mid-July? I kind of didn't understand that question, because my trade is on June 30th. So that must be some technical issue there. Let me run this by Jose. He'll probably have a better answer to that. Okay, let's move on to the next one. The next one is what? JP Morgan Chase. Now be aware of it. JP Morgan Chase is at the money, right? All that it needed to happen is not to go below the what? 138. Why am I repeating 138? Okay, let's bring this Word document that we've been building here into the picture, so you'll understand a little bit better. Okay, so I was even considering maybe doing something on industrial when I was preparing. But anyway, the way how the time is, if I can just finish the big picture, I will be very, very happy, So let's just look at here. So with the JP Morgan Chase, my commanding unit is a 138 call. I don't want this to go below the 138 call. It can go below 139, but I don't worry about it, because even if it goes below the 139, it's just a natural vibration. Just natural. If it takes out these, well, I'm going to call them multiple lows, although there's only two of them. If it goes below this 137.53, then I want to get out. Josip, why don't you put it at 138? Because algorithms know that human brain and human traders, rather than artificial intelligence, are always thinking about round numbers. They're going to put at 138, and guess what is going to happen? It's going to come out exactly to 138. You're going to stop up, and then it's going to go in your direction without you being in it. So that's why I'm picking here. What is this level? 137.53 is where I want to put my stop. My stop is going to be below the lowest of those two wicks. If this is good, type it in. So I'm going to type in Snap for everybody to see. Where am I putting stop? On JP Morgan. By the way, I do need to emphasize this is the JP Morgan here. JP Morgan is at 137.53. Oh, okay, I see what you're saying. Yeah, Joe, that's true. You shouldn't get stopped out by the expert. Yeah. Now, be aware of it on this one. I know I kind of rushed. I didn't show you this information, but on a JP Morgan Chase, I don't want to trade a July for simple reason that Earnings are on July 14th. So what expiry am I trading? June 30th. So be aware of it. JP Morgan is one of the banks, right? It's not necessarily the strongest of the banks, but it's all in blue. So I want to trade with the general direction of the market. That's a number A. Then I want to trade the sector that really matters, and obviously technology sector matters, financial sector matters, and then I want to break it down in the subgroups. So I'm talking about the market sector. Now I'm going to subgroups, and I'm going with the banks, and then within the banks, I want to pick the bank that I'm familiar with. J.P. Morgan Chase, they acquired Washington Mutual here on the Pacific Coast back in 2008. So I wasn't necessarily a client with J.P. Morgan Chase back in 2007, 2008, but I became because they just got incorporated, just like Thinkorswim. Thinkorswim is no longer Thinkorswim, it's TD Ameritrade. And as we speak, TD Ameritrade is becoming what? Charles Schwab. So there's a high chance that no matter what happens in the financial universe, JP Morgan Chase is going to stand. Now, of course, Lehman Brothers collapse. You had some other banks that collapse, Signature Bank. But when you're placing a trade, you want to pick the strongest of the strongest to trade. That's just my personal bias. I'm actually a very conservative trader, so I will put the stop where I think it's conservative. How do we put the stop? We go back to our account statement, type in JP Morgan Chase here. It's going to bring up the trade that I got filled for 22 cents debit. I'm going to create opposite, which is the flip side. Again, be aware of it. There are two spinning wheels here, the one on the top and one on the bottom. It's very essential for you to put the mouse on it. Otherwise, you don't see it because it's invisible. Okay? Then you might end up hitting this button and getting frustrated. But if you just hover over that lower one, then you will have ability to get this additional screen that I'm going to drag into here that you will need to adjust, right? So it's from here you can adjust everything, so you don't need to do it twice. So it's a market order, good till cancel, and then over here it doesn't say anything until you actually click on it. When you click on it, it does fill up JP Morgan Chase. Now we go to the next tab after that because this is now obviously filled in for you. Mark, meaning mark in this case is not market, meaning in between the bid and ask, whatever is in between the bid and ask, less than. And you can look in the chat box. What did I type in? 137. 53. But also by then your thing is not going to be, yeah, I know it's not going to be out in the money, it's going to be at the money. The whole strategy is called at the money, at the money. So when I go over here to confirm, this line is what is really important right here. I want to make sure that you all see it. JP Morgan at the market when it's at or below. Now be aware of it that I even have a break-even price. Break-even price. I do have it. So let me just send it in. And you didn't hear the ding. Reason why I didn't hear the ding, because what? Price is not there. Price would really need to be, I don't know why it's not opening it here, at 137.53. And it's not. It's not. So just like there's absolutely nothing you can do to push this market higher, there's nothing you can do to push this market lower. JP Morgan Chase had a chance to go lower. It has gone lower for 3 days, and according to the standard deviation for the last 3 days, after 3 days then pops up, as you can see over here. After 3 days over here, it popped up. It went again higher. So I wouldn't be surprised on a QQQ after so many down days that we have a lift. Let's look at the daily. See how many down days? So basically from the Friday, June 16, we've been going down consecutively, creating the lower low, lower low, lower. Today is the first day that we are creating the what? higher low. Okay, 10 minutes before the end, I like to discuss the big picture. And the reason why I like to discuss the big picture, because it's important for us not to get sidetracked in the small little trades without missing the big picture. So in the last, I would say, 5, 6 months now, I've been looking at the one line in the sand. And on the Dow Jones, it's not this slow. I just use this red line to mark the low. When did the market stop going lower? Okay, so obviously over here we stopped going lower. Not in December, not in November, but in October. That much for those believers that October is a down month. Everything that media tells you, it's usually not true. Anyway, why am I marking this level? Because this level was the February of 2022, and that's when the war in Ukraine started. And we've been going down, down, down till what month? October, which traditionally, because of 1987, because of the 1929 and blah, 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 supposed to be a down month. Yeah, but we're living in different reality. We're living in 21st century. And since then, look at that thing that was acting, and let me change the color here, as a resistance. It was acting as a strong resistance. Every time when it came above, it fell. Every time when it came above, it fell. Every time over here it closed for a little bit. Yeah, but then what happened the next month? Tried to go even higher, and then what? Fell right below. So this is like ice on which you are walking. You fall right below. Good luck you climbing up. But then what happened after October? Let me change color. We broke above. So now the ice sheet is acting as your what? As your what? Support. Very good answer. Very good answer. But that's just the Dow Jones. It's not that different, trust me, for everything else. So again, here's the low of February. Broke above it. For the last 4 months, we've been going up. Yeah, we have a little bit of breather on a technology. This is still nothing, because overall, the trend on technology is up. But don't get fooled. It's nowhere near the what? The previous high. We're not out of the wood. In fact, when you look at right here, what are we coming up here to? What kind of level is this? Resistance. And we've been stuck in this resistance area for quite significant amount of time. If you just count the months, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, a year. Oh yeah, after rallying off the low, we still have enough power to rally higher. I completely disagree. Whoever is on the TV saying, like everything's clear, is a liar. Because if you're running up the hill for 1, 2, 3, 4, 5, 6 months straight up, you don't think you're going to run out of the breath and need a little breather? Over here, did we needed a breather? Well, we definitely needed a breather, and that breather took 3 or 4 months. So this is the summertime. This is where usually people say, in May, sell away and go away, right? And TV is still saying, oh, everything's fine out of the war. There's going to be peace in Ukraine and love and understanding all over the world. That's not the case. Okay, let's look at the S&P. What's going on with S&P? Again, February. See how long we struggled with it? So it wasn't in October that we took it out. In October, we touched it, and then we what? Fell down. November, December. We just got above. In April, we almost fell below it. In what? In May. Almost came down to this uptrend. And in June, we rallied. Now, we still have a few more days in June. But same thing. Look what is on the left. Significant congestion. Like in Montreal, when you drive, Montreal is an island in the middle of the St. Lawrence River, and you have all these ponds, all these bridges, and there's one sign that they have that is easily understood by the French speakers and by English speakers, and that's congestion. So here you have a congestion. We're coming right in congestion. But the one that I find that really leads the market, in my opinion, that is really an eye opener, that is hidden from everyone. And I'm going to bring the FinViz here for you to see it. Why I'm making the argument that it's hidden. Is Russell. Yeah, it's small caps. I know they always say that. It's small caps and all this. Yeah, I agree with all of that. But the thing is, why don't I show what the Russell is doing? We can see it here under the futures. Russell right now, it's up more than anybody else. How do you know that it's up more than anybody else? Well, why don't you look at the percentage? So what's this percentage? Over a 1% up, while everybody else is barely holding on to their life. Less than 0.5%, a little bit more than 0.5%. Nasdaq Technology, which we traded, by the way, it's up over 1. But who's really leading? Russell. Don't get fooled by this information. That's the one-day information. In a big picture, it's irrelevant. Take a look here. This is the 2011. This is 2012. And here, what I'm marking it to you is that we have a February when the war started in Ukraine, and what has happened. And I'm going to wait here till you type in the chat box. What has happened in the Speak Up apps, if you can type it in. What has happened? Correct. It didn't go up. Very good. I wish you just put the name so I know with whom I'm interacting with. So it doesn't matter that over here we have a Dow above, Nasdaq above, S&P above. What about the middle class America? Struggling. And look where we are sitting. We're really sitting at the trend line. If you lose that trend line, we're not that far off from this red line, which is what? Low of the market. So if anything is going to collapse, it's going to be Russell. Then how do you trade the Russell? Well, I personally trade Russell using these leverage products. Now, of course, you don't need to use these leverage products. You don't, but you could if you want to. Why is this up 2%? Because it's inverse of the IWM. Remember, IWM is about 1%. This is inverse to the opposite. And guess what? It's very affordable. It's only about $14. Now, don't go out there and trade this with options. Don't. Just trade it with physical stocks, with physical underlying. UWM. It's a flip side, right? So it's going to be up 2% in the same direction. So if you say like, well, IWM, I cannot afford to trade as a physical stock because it's $182 and it's up what? 1%. Then don't. Trade this. UWM. It is up what? It's up 2%. Well, I can't afford that one either. Why not? And guess what? It even has an option. Of course, it has a monthly options. It has a monthly option, but it's only $32 stock. So you would need $3,277. Let's look at that before we finish up. Because this was a good session. I threw a lot of stuff at you, and I suggest personally that you should maybe revisit this and learn more from it. UWM. So there it is. Even on a Thinkorswim, if I bring it up, UWM, you would see it, same thing. July, and then you have August. And when July expired, they're going to add the what? September. And then when August expired, they're going to add the what? November. And when September expired, they're going to add the what? December. So let's say like you make complete mistake out of it. I think we have one trade. I open it. One of the sessions that I did, I open it. Yeah, QID. I have a QID open over here, and it wasn't really doing that well. But this is a paper trading account, so it's not really burning issue here. Okay, these are the QID. On this one, I have a QID actually option. Let me just change this over here. I have a QID 100 shares. So what I'm gonna do with the UWM, right? I'm gonna go ahead and I'm gonna just buy 100 shares. So I'm just right now here. It says one share. Let's just add 100 shares. So I'm buying 100 shares. 100 shares. It's cost me $3,282. Let's make sure that I have enough. I have here 6,000. So go ahead. That is gonna get decreased now because it's a limit order. It's not filling me. Do you believe that? Because of that one extra penny. Okay, we're gonna finish in like 30 seconds here. So just stay patient here with me. I'm gonna just make it into market. Ding. As soon as it dings, it's crazy. Paper trading account, it wouldn't fill. Okay. Now it's still not filling me. This is insane. Let me talk about what I'm going to do as soon as I get filled. The moment I get filled, I'm going to look at the intrinsic value. And I want all of you to be aware of it. Intrinsic value is only 83 cents. But what do they want here? $1.75. And over here they want what? 160. Did you hear that ding? That's mean I got filled. I got filled exactly at what price? 32.84. So that's mean 84 cents is in the money. I'm going to instantly turn around and I'm going to sell the one call. And I'm going to sell it to the market because we need to finish the session here. 1 Mississippi, 2 Mississippi, 3 Mississippi, 4 Mississippi. Come on, fill me in before the session ends. Now we are running overtime. So what I'm trying to point, oh, you know what? Because no volume. Okay, if this was a real trade, this would say one contract filled. So I got 170, which is right in between. So think about it. What's the most that I can make on this trade? I actually preserve my money. I invested $3,284, and out of the 170, I need to take away, I believe 84, it was in the moneyness, 86 cents. So 86 cents. So what's my rate of return? Well, let's divide it. 3, 2, I think it was 8.2. Okay? That's about 2% for 1 month. Now, could you do that every single month? Sure. Then 2 times 6 is what? 12%. Why do you need a financial advisor? Why do you need a financial advisor? I mean, you can get even more creative with that. Look, why would I buy this? Why don't I just go ahead and sell this now? Let's be aware of it. Do I have enough money? $3,374. Ladies and gentlemen, I'm selling. I'm not naked. I'm selling it cash. Okay? One more time. I'm selling the 32 put. Just sell vertical, single. Not a single. I mean, no, not a vertical, just a single. When I click here, how much money they're going to lay out? Well, they're going to say 32 minus $75, we owe 3,000. Now, be aware of it. Do I have here 3,000? Yes, I do. Send it. Now, I do need to change that to market order. Okay, 75. There it is, ladies and gentlemen. Now, my buying power is supposed to be gone, but it didn't go down because they only need 33% of that. So that's mean out of the 3,000, they only need the 1,000. So there it is. So when you go over here, why did they keep it over here 3? Because of the buying side, not because of the cash secure side. So recap, overview of everything that we have done, right? So we started the session first with trading, and then we reviewed the stops. That's the one thing that I remember reading here from other students who are like, hey, I want to know where the stop is and all this type of things. So we did that, right? And then at the end, we ended up pointing out it doesn't matter what the news says, that the S&P is up, the Dow is up, the Nasdaq is up. The middle class America is struggling. We're closer to the low than to the high. But this is being hidden from the masses. The only way you can find out is to look up the FinViz or to pull up the platform and to do it. Watch this. If we lose this low, there's an abyss below us. So stay hedged. Trade these products like a UWM or a TWM, and have a good day. And see you. Not the next month. Next month I'm taking off. I'm going to Europe. I will see you in September.